Welcome back. You're tuned in to Bazaar Morning Call here on CNBC-TV18. Well, as promised, let's get in Sid Khemka, Head of Research Wealth Management at Motilal Oswal on the show. Hi, Sid. Good morning. Good to see you. And as always, Sid, I want to ask you about a couple of names, but let's focus on tech pack first. Overnight, the Nasdaq has done well. The Nifty seems to be getting its mojo back. The Globe seems to be in a better space, but the tech index is 15% away from its all-time high. What's your view on the tech space, first of all? We'll be getting numbers in the next 2 weeks. And what's your top pick from the tech pack?
Yeah, good morning, Nigel. Thanks to be on the show and wishing everyone a happy Rath Yatra. So good day to be on the television. So if you look at overall globally, things are seeing some improvement while the US Fed rate cut has been paused. There is still talks of the tax cut that is still pending from the Trump's election promise. I think that could be a big positive for the overall tech spending. The management commentaries across have been mixed. If you see, Accenture has upgraded the lower end of the growth guidance, but new order wins are not coming forth. So clearly, near term, there could be still weakness as uncertainty persists. But what we see is that some of the Indian tech companies, they have a strong order book, execution is picking up, and given their niche presence, they are definitely seeing tailwinds towards their own efforts. So for example, one of our top picks, Tech Mahindra, has seen a management change, and we are seeing the transition under the new leadership playing out well. We believe that that could be a good, strong play. HCL Tech is the another preferred pick within the tier one space. Given it's a diversified book, we believe that's a defensive bet within the IT space, clearly with a strong diversification across digital infrastructure management and other businesses. Again, if you look at tier two is the space where the growth is much better and faster, and within that niche sectors such as again digital Gen AI investments are leading to stronger growth. So Persistent and Coforge, these are our two preferred picks within the tier two IT space. We see strong earnings growth over the next few years. In both of the stocks, at least 20-25% earnings growth, and we still see headroom for potential upside in terms of valuation. So Coforge is our top pick with a target price of 2,200, giving nearly 20% upside.
All right, so that's about Coforge. Siddhartha, I wanted your thoughts on Nykaa because they held their analyst day yesterday. They are speaking about growth in their beauty and personal care business, speaking about the fashion business breaking even in FY26, mid-single digit sort of margins by FY28. And their own brands, a Nykaa house of brands, likely to compound at about 30%. The stock has been an outperformer over the last 3 months or so. It's rallied about 25-30%. How much more is in store according to you? Do you think it's good for more?
Hi, Mangalam. So, unfortunately, we don't cover Nykaa, but what we hear from the management meet, I think definitely the focus on in-house brands and the growth numbers that they are putting up, that should be helpful. As a space, we like this space, the e-commerce space, and given the niche presence in the personal care, we believe growth should be good. But overall, we don't have a view on Nykaa.
All right. Do you have a view on Eternal and Swiggy? Because Nykaa has announced its foray into beauty quick commerce. They've launched Nykaa Now as well. They will be fulfilling orders for beauty products between 30 to 120 minutes. They've launched that in top 10 cities or top 7 cities, if I remember correctly. You track the e-commerce space. You like the e-commerce space on Eternal and Swiggy. What are your thoughts?
I think many players are jumping into the quick delivery business, and that's only to show that the model is effective and is a good solution for the Indian market. So we definitely remain very positive on the quick commerce. We believe it's a once in a generational growth opportunity or disruption opportunity in the way consumption happens in India and the way the delivery is happening. So near term, because of the increased competition of Zepto, the cashbacks they are giving, there is definitely some pushback in terms of numbers. Both Zomato, Swiggy have raised capital and they have front-loaded the capex. So again, we believe that Zomato is our preferred pick there. We believe that the food commerce, food delivery business, that is a stable market leadership for Eternal. They're making cash flows there. Quick commerce, we believe that by Q2, Q3 should see improved numbers, and overall we remain very positive on Eternal. We have a buy rating there, and we believe there could be decent upside from current levels as well.
Sid, what about the real estate pack? What do you like from there? You have the new IPO, that is Kalpataru, that hit the market. A lot of smaller players as well have been rallying in the last few days. Some excitement in the real estate space. What is your preference? We had yesterday Baman Rustamji Irani who joined us, and he, as always, is sounding rock solid. Things are good. They'll achieve the numbers. What is your reading, and what do you like more importantly?
Definitely, I think after a pause, now real estate sector should again see improvement in the demand on back of the improved liquidity, whatever efforts that RBI has taken in last couple of months, the sharp cut in interest rates, the CRR cut. I think that is only going to improve the overall liquidity in the system and lead to, and the lower interest rate should lead to demand, especially for the mid-tier real estate or mid-tier housing segments. Previously, we saw a lot of growth coming forth in the luxury and the upper end of the housing segment. But with the interest rates now coming down, we believe the mid-market housing segment that should really pick up. And players like Godrej Properties, which are present across India, that is something that is within our top preferred pick, given its national presence, large presence in the high growth markets like Mumbai, NCR, as well as the NCR region. Apart from that, DLF is another stock that we like. It is among our preferred picks, consistently delivering growth, and we have a positive with there as well.
So you heard what Capacity Infra had to say to us. Do you like that stock? And in general, the infra space, do you think it's ripe for an up move from here on?
Yeah, definitely. So again, we don't have coverage on Capacity Infra, but overall what we are seeing is that ordering momentum has been healthy, especially if you look at in the T&D space, renewables, as well as the defense segment. Even our economists suggest that the central government capital spending has surged to the highest ever monthly level of 2.4 lakh crore in March. Even for FY26, they have front-loaded the capex spending even for April, May. So spending in April stood at 1.6 lakh crore, which was up 61% on a YoY basis. Obviously, last year, April, pre-election, there was not much spending. So definitely that's a big positive for the overall capex theme. As I said, some of the key segments that is witnessing strong growth is the T&D segment, renewables and defense. Players like L&T, Kalpataru, KEC are benefiting from the strong pipelines, plus the defense overall global theme that is also playing out. So our preferred picks within the overall capex theme, L&T, which is a top pick with a target price of 2,950, and then KEC International in the T&D space.
Okay, so some of the T&D players is what you're going with. Siddhartha, hi, good morning, good to have you on. On financials, what are you doing? I mean, yesterday, the whole market was lit up. Obviously, you got 12,000 crores of FPI buying coming in, so everything was up. But give us the one or two top names. There could be banks, non-banks, lenders, even non-lenders for that matter. Maybe some ideas here.
Yeah, definitely. Good morning, Surbhi. So I think, yes, that is a big theme that is playing out this year. It's a purely domestic theme, so it's not affected by the global volatility and the geopolitical concerns. Plus, RBI has taken a lot of efforts to improve liquidity, bring down the cost of capital. That is supporting the entire theme. So overall, what we expect credit growth to improve, NIMs to stabilize, and then again, especially for the NBFCs, NIMs will see some improvement, and followed by banks where the entire effect of the CRR cut as well as the liquidity will start taking place. So definitely banks are something that we like. ICICI, SBI, HDFC Bank are our preferred picks. Within the lending, NBFCs, what we like, Bajaj Finance, we believe consumption credit will go up, and being the market leader, that would continue to do well. Shriram Finance and Chola, these are some of the other stocks that we like. Within the non-lending NBFCs, capital market as a big theme, we are seeing market volumes going up. Again, a lot of IPOs have started coming in, so you will have traction in the CDSLs of the world, the AMCs have started seeing a lot of interest back, and finally you have the AB Capitals of the world, where L&T Finance, AB Capital are some of the other themes, and CDSL are some of the other themes within the overall financials that we like.
Okay, all right, got that, Siddhartha. Thank you so much for the ideas this morning. You have a good trading session, and we'll connect again soon.